Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I feel like we're about to move into the next chapter for Tesla. It's an important one. This is going to be a big jump in the S-curve. It's when Tesla can finally take control of their most constrained component in their product. Well, aside from the transitory chip shortage. It will mean that Tesla can finally grow at their own speed, and not at the speed that their third-party suppliers want to, or are capable of, producing batteries for them. There won't be any excuses for Tesla's growth from here, at least when the supply chain issues are a thing of the past. I'm seeing a lot of the Tesla community very excited right now. I know there are some major events coming up, and I do mean major, and a lot of celebration around said events. Everyone is ready to party as if it's all a done deal, but we don't know how some of these will go. We expect that the production lines of Berlin and Texas should go pretty well. Tesla is now very experienced in setting up new production lines, although there are also a lot of new processes in these factories. Tesla has also been running and testing them for months though, due to the buildings taking so much longer to come online. However, Tesla doesn't really have a track record of manufacturing batteries yet, and Tesla have in a sense bet the future of this company on this battery production line. Their largest factory has a capacity that we can only begin to speculate on, but such a capacity is only necessary if there are enough batteries to go in the cars. We have only officially heard that enough 4680 batteries have been made for about 1,000 Model Ys, from a factory that was supposed to be doing 20 gigawatt hours a year. Tesla is transitioning from being an electric car company to an electric car and battery company. Hold on there, shows what you know. Tesla is actually a robotics, AI, energy company. Okay, sure, Tesla does AI, robotics and energy, but they don't make any money in those areas. Not even FSD. Sure, they may sell FSD, but it's not enough to cover the R&D they spend. Tesla's AI, robotics and energy divisions all lose money. Currently, the only profitable side of Tesla's business is selling vehicles. Tesla's 4680 batteries will, however, also be incredibly profitable. Not only will these batteries cost significantly less than 2170 form factor, but due to other advances in manufacturing, Tesla will need fewer batteries in each vehicle. The fewer the batteries you need also saves costs even further, potentially adding an additional 10% onto gross margin for each vehicle. And although that may only look like an improvement of about 1/3 when it comes to gross margin, which is massive of course, well, that margin is felt all the way down. And when we get to the operating margin, then we're at an improvement of 66%, and more or less a similar improvement in net profits too. Imagine one component of your product increasing your profits that much. That will certainly be felt in the stock price too. The market has not priced this in. Arguably, you could also say something similar about FSD if that comes into fruition and had a much higher adoption rate. The 4680 does more than just reduce cost and improve efficiency though. It has been designed to be built fast, to thus relieve somewhat this massive constraint of batteries that Tesla has in order to try and make enough EVs as possible. No one is or can make batteries close to fast enough to meet the demand for EVs, which is one of the primary purposes for the 4680. Tesla has so much demand, and it will be batteries that are the largest bottleneck in production, not just for Tesla, but for all EV manufacturers, hence why they're all scrambling right now to partner with a battery company and make these ridiculously expensive battery fabs. Elon and Tesla have come through time and time again, making the impossible come into fruition. I'm sure this time will be no different. In the past, it hasn't gone that smoothly either. Production hell is one of those examples, but Elon and Tesla did everything they could to sort it, and it was a stressful time for everyone involved. They got through it, and are now the only BEV manufacturer to hit volume production. Well, if you want to be pedantic, the only BEV manufacturer with a car that has airbags to create volume production. This time is different. Tesla is now a massively profitable company that can support the new factories getting up to volume production and beyond. If they run into issues, money can be thrown at the problems. There is now also a $1 trillion valuation and a big war chest. We know that the battery is real and they have made 1 million, well, hopefully by now millions, of sales. It's just a matter of scaling it up. And if they can, they know it's worth trillions more. I'm expecting that this is such a difficult task that not everything will go perfectly. There will likely be issues that crop up. I mean, look at the size of the factory. There is so much that had to be done to get it up and running. In addition to that, margins are going to drop significantly in Q2. Tesla's new factories will be ramping up and take some time to hit volume production. They have a lot of the same costs to incur, whether producing 5,000 units a month or 50,000. They need to ramp up to volume production to hit the economies of scale of these new factories. In fact, Texas probably needs to go far beyond volume production. We've seen the pace at which Tesla can hit volume production in Shanghai, and seen how fast some of the cars have been coming off the line there too, almost at a rate of 1 million vehicles a year. And since Tesla has disallowed drones over the factory, there are rumours that Tesla have hit even faster rates now. I don't think these factories will have much of an issue hitting a high-speed production rate, at least not when they've mitigated the component constraints. It will quickly come down to batteries as the new constraint. Berlin is using 2170 batteries, which there are obviously in limited supply, and Tesla isn't investing in increasing that supply by any major significance, as the 4680 is just that much more superior. Tesla appear to only be producing the performance versions there still too, so there wasn't really that big a hurry in getting the Berlin factory online, as they quickly jump into battery constraints anyway. The Berlin 4680 factory is what matters there, and it's going to be really interesting to see how quickly the 4680 factory starts producing batteries in Texas, to get some indication of how long it might take Berlin. At a guess, we may have about 20 gigawatt hours of 2170 batteries coming from LG. That's enough for about 250,000 Model Y performances a year, which is about the run rate we were told Berlin should hit by the end of the year. So perhaps there are enough batteries for Tesla to get to volume production with performance models, although I would say it likely that Tesla start to also make long range there too, unless the demand for performance alone is just that high. So perhaps by the start of next year, Tesla might introduce the 4680 version in Berlin. My thoughts about the stock price now are that we could run up to an all-time high. We have Texas opening and 4680 vehicles coming to market. I'm hoping the specs from these vehicles blow everyone's minds, and the market realizes that Tesla have just once again reinvented the electric car. Then we will get the earnings report, and I'm expecting margins to blow everyone away there, and hopefully some really good profits and an outstanding EPS, although there have been some one-off OPEX costs due to supply chain issues, and then perhaps a good earnings call too. After that though, it's tough to know what will happen. I think Tesla have another tough road ahead of them, perhaps another production hell. It may end up being a volatile year. We can at least rest assured that there is a lot of demand for these products, and they have massive profit margins. Tesla have the best people in the world working on this, and they're working as hard as they possibly can. I've been saying for some time, this is going to be the year we find out just what Tesla is capable of, and 2023 is when we make a big jump in the S-curve. There might be some volatility this year in Tesla transitioning into a battery company. We don't know what is up ahead. We need Tesla to prove to us that they can make batteries. Once that is the case, and I feel comfortable, then I may also change my investment strategy. The 4680 production is still going to be the most important thing to watch this year. Tesla can't be the company they want to without it. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.